Good morning and welcome to Moneycontrol. I'm Nandita Khemka. It's a brand new edition of Opening Bell. But before I move any further with the show, wishing our viewers a very happy Navami and a very happy Dussehra in advance. I know the festivities are missing from Dalal Street, but here's wishing all our viewers a very, very happy festive season. Of course, up until Diwali, the festivities will be on in full swing, hoping that the festive spirit comes back on the Dalal Street as well. But lots of cues to watch out for today. It's an important day. We have the RBI policy outcome at 10 a.m. We have auto sales figures that have started trickling in. So these are the two big cues to watch out for from a market standpoint. Of course, yesterday we had a similar story like what we saw on Monday. We started on a very strong note, but we ended the day with on a whimper, so to say. Gave up all those gains. In fact, we clocked in eighth straight day of losses on the index, and today if we end the day in the red, it would be 9 straight day of losses on the Nifty, and that's a phenomenon that hasn't really happened in recent times. So it will be something that we really don't want. So hoping that we snap out of this 8-day losing streak today. In terms of stocks, of course, autos, banks, realty, these rate sensitives will be in focus. If you look at the GIFT Nifty, the cues coming out there is pretty flat. So let's see, we are poised for a muted open today. Let's see how things pan out. Whether or not RBI sounds dovish and manages to lift sentiment is something that the street will really be watching out for. Lots lined up. Don't forget to send in your queries. We will be addressing them as well with our experts on the show. So look forward to hearing from you guys as well. But before we move on or move any further, let's take a look at the top headlines at this hour. Wall Street ends higher in a session marred by volatility to end the month of September on a high. Actually, the S&P 500 reported its best September in nearly 15 years, while the Dow Jones advanced for the 5th straight quarter. Meanwhile, futures are trading lower amid a likely US government shutdown as the Congress fails to pass funding bills. Asian markets trade mixed. China and Hong Kong markets are shut on account of a holiday. In fact, Chinese markets will be shut till the 8th. On account of the New Year celebrations, while the GIFT Nifty is indicating a muted open for the Indian market. Crude oil prices settle lower as investors brace for a supply surplus amid OPEC's output hike. Meanwhile, gold hovers near fresh records on the back of a soft jobs data, bolstering rate cut hopes. And the outcome of the RBI MPC's two-day meet is expected today, with the central bank likely to take a pause on rates and stance both, even as the GST rate cut could see it revising its GDP growth upwards and inflation expectations downwards. A dovish tone may, however, keep the door open for future rate cuts. All right, then, those were the top stories then. But let's touch upon the top story this morning, and that will dominate the headlines till about 12 o'clock, 12:30 at least. Of course, it's the RBI's, policy meet outcome that will be announced by the governor at 10 a.m. to understand what we should be expecting, whether or not a rate cut is possible, whether or not the governor will go for a pause. Lots of divide this time around. One section expects a rate cut, and one section expects the RBI governor to hold on to rates. But to understand what our poll is looking like and what to expect from the governor's speech, let's in fact bring on board my colleague Hamsini Karthik, who's the editor, Banking and Financial Services at Moneycontrol. Hamsini, lovely to have you right here early in the morning.
Lovely to be here, early in the morning. And of course,
first wish you a very happy Navami and Dussehra.
Same to you.
So, but let's understand whether or not there'll be some kind of a positive surprise coming out of RBI or not, because sentiment on the Dalal Street has really been quite downbeat, right? First and foremost, can we expect a rate cut, and what are the arguments for a rate cut?
Well, right now the expectation is more in favor of a pause. But what everybody wants to sort of understand from the governor and the monetary policy as such is, are we going to see a little more clarity in terms of the direction of rates? Because from last time to this time, there are a lot of variables. We've seen the whole US tariff situation, status quo, and with the H1B thing happening, it's actually, set the clock a little backwards. So what is going to happen to remittances? That's had a rub-off impact on the rupee as well. So where do we see rupee from here on sort of, traveling? That's another one. Internally, we did not expect a pre-Diwali or a pre-Dussehra GST, but that's been the case. We've had a lovely welcoming of the Dussehra with the GST cuts. So how that is going to sort of translate to growth? Will the governor tinker with the growth rates? Because after the little bit of adjustment that we saw in December last year, which was incidentally Mr. Das's last monetary policy, we've not seen RBI really, play around much with the GDP estimates. Although on the inflation side, there is much more comfort now than what was earlier. So these are the large, 3-4 macros that we would watch out for. But as I mentioned at the beginning, the expectation is that of, a pause this time around as well, because that was the language adopted in April.
Sure.
We had a rate cut, a front-loaded rate cut, and we also flipped from an accommodative stance to a neutral stance. Now, this is a very lethal combination, because when generally a rate cut happens, accommodative stance is expected to be, sort of held for a longer period of time. So that's sort of a signal, that was sort of a signal that we're in for a long pause. But the variables have changed since then. Although, I mean, this is one of the times where we can say off record, on record. On record, the sentiments are in favor of pause this time around, with a possible rate cut in December and another one in February, because that's when we will see how the GST impact has played out.
50 basis points more in this easing cycle.
In this easing cycle. The terminal repo is somewhere benchmarked at 5. So we are factoring in for another 50 basis points, although there's another school of thought which is of the belief that maybe another 25 bips is the max we're going to get this fiscal. And we'll see how the GDP factors play out next fiscal and see where we take the terminal rate to further. But having said that, like I mentioned earlier, the macroeconomic situation has changed, and domestically the favorable thing is that on the GST front, will we have an early Diwali gift from the RBI?
Yeah, that's what you're hoping for.
A lot of that. There's a lot of expectations around that. There is one school of thought, and SBI Research came up with a wonderful report on that, which vociferously batted for a rate cut. Yes. So, will SBI finally say that they got it right on the rate?
Last time I think they did in April say that they got it right. They were the only very few ones who were predicting a 50 basis point
50 basis, if I'm not mistaken, and they said the cuts will be front loaded, and it exactly happened that way. But having said that, Nandita, even in the June policy, SBI was expecting another rate cut to happen. They didn't expect that, or they didn't rather think that we would be in for a slightly longish pause. So June policy, July policy, they were a tad disappointed. August policy, they were a tad disappointed. Will the disappointment reverse in October? Let's see. I mean, we have another hour, give or take, to go.
Just about an hour to go. Just very quickly then, before I get on board my technical analyst for today, the market will be looking for something positive, dovish commentary. If at all there is a pause, I mean, we are okay with it. But if the stance doesn't change, again, of course, we are expecting that the stance will not change because it's just been changed to neutral. What is that one signal that the market should take heart from in terms of the tone of the RBI governor?
Sure.
Would that be a downward revision in inflation for the first quarter of FY27? Should that be taken as a positive sign for the RBI to signal that there are, yes, more rate cuts in the system? We're just pausing for now. Doesn't mean that we won't dole out more rate cuts.
I think as far as downward revisions are concerned, maybe we'll want to play it out to see how the GST effect really sort of transpires. If that indeed does, boost consumption in some way, there is a possibility of inflation number, inching up a little. Because if you look at the inflation differential between Q3 and Q4 of this fiscal, there is a reasonable spike that is getting factored in. So perhaps my reading of that is that RBI did expect a GST cut to happen, but it was sort of anticipating for that cut, or it was factoring in for that cut to show in between Q3 and Q4, right? Now that has been preponed by a quarter. So are we going to see a bump up or a downward revision in inflation? I would think a little too early to call out.
Okay.
But two things that we would want to know, the street would be very interested in knowing, and this is something that came in from the finance minister as well, that she's closely watching how the bond trajectory is moving. So any commentary on bonds will have a impact, a second order impact on the equity market as well.
Sure.
So how is he going to play out on bonds, and what is the strategy of RBI in as far as defending the currency is going to be like? We've held fort very much at that 88 levels, but we've come far from 85 to 88.
Sure, yeah.
It is pro exports, the currency movement. What are the signals RBI is going to give today? That's a key thing to watch out for.
Sure, that's what we need to watch out for. Of course, the markets will be hoping for some kind of dovishness from the RBI governor this time around. I think last time around it was the 4.9% figure, inflation figure. For the first quarter of FY27, that gave out a very, very hawkish signal.
Yeah.
But let's hope we see some bit of dovishness. We need some festivities to return to the Wall Street also.
Sure.
But let's hope that. And of course, I'll touch base with you right after the governor's speech as
Absolutely.
well, Hamsini, with your take. But for now, we have to shift focus to equity markets. Just about 3 minutes to go for the markets to open. Very quickly, let me bring on board our technical expert for today. Joining me is Ruchit Jain of Motilal Oswal Financial Services. Ruchit, lovely chatting with you. A very, very happy Navami and a happy Dasera in advance as well. Your thoughts on where we are headed? Last 2 days, we've seen what has happened. We started on a good note, but we fizzled out towards the end of the day. September, we started on a very good note, but we are back to square one, ended extremely flat, ended the month extremely flat. What are your thoughts? Do you see more downside for today? What would be the levels you'll be watching out for?
Yeah, hi, very good morning, Nandita. Festive greetings to you and all the viewers as well. So if you look at the markets, yes, last 8-9 trading sessions, the markets have ended continuously on a negative note. And if you go by the historical data, there have been 5 such occasions in the history where we have seen consecutively 9 trading sessions where markets have ended on a negative note. But what happens post that, in next 4 to 5 trading sessions, we usually see a rebound in the markets, and because the momentum readings go into the oversold zone post such sell-off. And if you look at this time it's also coinciding with the expiry. And if you look at the data, then definitely the short positions have been rolled over because the rollover in Nifty is higher than the average. And look at the FIS positioning where their long short ratio is just around 5-6% odd. So they are starting with record bearish positions at the start of the series. So this, in fact, when the positions are short heavy and the momentum readings are oversold post the recent sell-off, this in fact leaves a room for some short covering going ahead. So we believe that also markets are trading near that support of 25,400. So price-wise downside should be limited, and we could expect some short covering move at least in the near term. If not a big rally, but at least a relief rally, I think, should be there on the cards.
Okay, a relief rally should be there on the cards, even though it won't be a very sharp one. But the first ticks coming in this morning are, slightly positive, very flat though. I mean, just about 9 to 10 points uptick. In fact, now we are picking up pace. The first ticks are actually indicating a good day for the market today, but let's see, very, very early days to really comment on that. A 45 to 50 point uptick on the index. 24,650 is back on the charts. Sensex up 100. Mid-cap index moving in tandem largely, 120 point uptick on the Nifty mid-cap index. Advanced decline ratio at the juncture looking strong, 2:1. Yesterday, towards the end of the session, we saw the advanced decline ratio flip a bit. It was marginally in favor of gainers, and right now, of course, it's firmly in favor of the advances. Let's see how things really pan out. But the Nifty bank index extremely flat. Yesterday, the Nifty bank index managed to hold out in the green, outperformed the benchmarks. That was a good sign, and of course, that came ahead of the RBI policy decision today. But let's take a look at the PSU bank index. I want to see that index because since the start of the week, we've seen good traction. The PSU bank index has managed to clock in a rally of 3 to 4% in the last 2 sessions itself. It has been one of the top performing sectors. But today, this morning right now, trading in the green but fairly flat. But what's taking the lead right now is the pharma pack. That's up 0.8%. Remember the 100% tariff on branded drugs that comes into effect today. A lot of selling came into the pharma pack after the announcement of the tariff. So I think some bit of buying emerging after the kind of weakness we saw on pharma names. So pharma is the top sectoral gainer, 0.8% kind of gain coming in there. Autos, of course, as I mentioned, auto sales data will be trickling in throughout the day. Showing strength, the auto pack is up 0.6%. Real estate index, which has been extremely beaten down, is 0.5% higher. Metals also extending their gains from yesterday. Energy pack looking okay. So yes, all in all, it is a positive start. Very flat though at the current juncture. In terms of the individual movers, Shriram Finance, on the clarification that no large shareholder has approached them for any kind of stake sale, that stock is up 3.5%. Sun Pharma is among the gainers. M&M, Bajaj Auto, these are some of the names. Maruti Suzuki from the auto names doing well. Trent has managed to recover after yesterday's weakness. You also have Reliance Industries that's giving support to the index. So these are some of the names dominating the gainers list. On the losers list, you have the life insurers, HDFC Life, SBI Life. Eternal, some bit of profit taking, but nevertheless, consumer tech names have done well even in a weak market, and stocks like Eternal, Swiggy have been giving good gains, and brokerages have also been hiking the target prices on these names. Some bit of profit taking today. BEL also witnessing some bit of profit taking, saw good traction on the back of order wins recently. HDFC Bank under pressure, L&T remains under pressure. Bajaj Finance, Coal India, these are some of the other names that are among the laggards. But Ruchit, let's talk about banks, PSU banks versus private players. What do you prefer? Because we've seen very good traction in PSU names, even SBI for that matter has been doing well.
So in terms of relative outperformance over last 15-20 days, we have clearly seen a good buying interest in the Nifty PSU banking space. So that outperformance could continue going ahead, as you see that from the private sector banks, except selective names like Axis Bank, which have managed to show a decent pullback from its swing lows. We have not seen that kind of high volume action coming in the private banking space as of now. So I think better to stay with the outperforming space, and the Nifty PSU bank index probably going ahead should continue to show a relative outperformance over the private banks.
Okay, PSU banks will continue to show relative outperformance. I want to talk to you about Shriram Finance, top gainers. Of course, it has come out with a clarification, and the street seems to be cheering it. What kind of a trade should one take on a Shriram Finance? Is the top Nifty gainer today?
So overall, the stock has went through a decent price-wise as well as time-wise correction in the last 1.5 months, and the stock is trading close to its support of 580-600. So price-wise downside seems to be limited from here on. So one can trade with a positive bias and look for potential targets around 660 in the near term. So at current levels, if one has to take any trade Shriram Finance, so go long on the stock for target 660 and keep a stop loss below 615 on the long positions.
Okay, that's the view on Shriram Finance. But Bajaj Auto, I want to draw your attention to this stock. Sales figures for the month of September have come in. Sales are up 9%. 5.1 lakh units sold vis-a-vis expectations of 5 lakh sales. How would you look at Bajaj Auto? Because I think comparison with Hero Moto and TVS Motors will show that it has underperformed. Next level to watch out for on a Bajaj Auto, Ruchit?
So that relative underperformance can also be seen in the stock prices, although the overall trend for the auto space looks positive. But if we look at the comparative returns in the recent up move from Hero MotoCo, Bajaj Auto, and TVS, then definitely Hero and TVS have shown a good outperformance. So Bajaj Auto has a good support around 8,500, around its 200-day exponential moving average. But we believe that chart-wise, technically, Hero MotoCo looks much positive. So from a risk-reward ratio perspective, also last 15-20 days, Hero MotoCo has rather seen a time-wise correction, but that is not close below its 20-day exponential moving average support even once in this correction. So this clearly indicates a strong buying interest in Hero MotoCo over Bajaj Auto. So if one has to build any long positions in the auto space, especially in the two-wheeler segment, then Hero MotoCo should be preferred over here.
Okay, Hero MotoCorp should be preferred over a Bajaj Auto. That's the view. But one stock that I want to talk about is KPIT Tech. It saw a sudden fall yesterday, somewhere around midday, and we saw 7-8% being shaved off. Today, of course, it's up 1.5%. But we have a couple of queries on our feed on this particular stock. Naveen wants to know your thoughts, and even Satya CK. He's been holding shares for a couple of years now at 1,050. Although he's still making some profit here. Is it better to switch out of this stock now? How would you really look at this stock? And if somebody is invested at higher levels, say 1,200 or so, what should they do?
I think switching makes sense. There are two things. One, the sector is not in flavor. We have seen that over last few months, the IT has shown a consistent relative underperformance compared to the broader markets. Even when the markets were doing well, IT has not shown any kind of great returns. So I think relatively this relative underperformance could continue in the IT space. And within the IT also, you should make a comparison between stocks that which stock is falling less no in such markets and which stock is not showing any kind of significant which stock is underperforming. So KPIT Tech has consistently been witnessing selling pressure. So I think no the trend as of now remains negative, although it's trading around its midterm support on the weekly charts. But considering that the sector is not in momentum relatively until there are signs of reversal, one should tend to avoid the stock. And rather, if you want to switch from this IT to any other sector, then I think you should either go with auto or PSU banking space where we can expect some good momentum going ahead. And within the IT space, if you want to stay within the IT space itself, then but rather than KPIT, I think Emphasis has overall positive chart structure, but the emphasis of Coforge within the mid cap IT space. So if you want to stay with the sector itself, then switch to either Coforge or Emphasis.
Okay, that's the call. Switch to either Coforge or Emphasis if you are stuck in a KPIT Tech. But before taking up other queries, I want to get in your thoughts on a trend. It has been stuck in a downtrend. It was a showstopper stock of 2024, but it has been the worst performer of 2025 if you look at the Nifty movers. How would you look at the trend now? Is this weakness a good buying opportunity for the longer term? How are you looking at trend now?
No, I think just because it was an outperformer in 2024, no one should not look only that one factor. Until there are any kinds of reversal signs coming in going ahead, one should avoid any kind of bottom fishing in trend over here. I think no major support going ahead for the stock is no still far around 4,200, 4,300 kind of range. So if the stock comes there, then the risk reward ratio would become favorable. But for now, either let the stock come near the major support levels or let it show any kind of trend reversal signs. Then only one should look for any fresh opportunities in trend. But just keep on your watch list, but no buying signals emerging over here.
Okay, no buying signals emerging for trend, and one should really avoid bottom fishing at these levels. That's the call. But let's shift focus to another query. The next one's coming in from Nitin Shahji. He has a query on Vascon Engineers. He wants to know whether it warrants a new entry at this juncture. The stock has seen a one-way move. If you look at the last 1 month chart, you will see a 40% up move, and it's very close to its 52-week highs as well. So does it make sense to get in at these levels? How are you looking at this in terms of risk reward? Has he missed the bus here? What's your advice?
The volumes have been very good along with the price up move. This is definitely a positive sign. No, any price up move supported by good volumes generally tends to show a positive trend. So going ahead, I think positionally the stock has still potential to rally about 80, 82 kind of range. So, but the only thing is that last few trading sessions already there has been a move from 50 to 70. So I think keeping a buy and dip approach should be an apt strategy for this stock. So if any existing long positions are there, continue to hold on. If you get any intermediate declines towards maybe 64, 62 kind of range, then look to add fresh positions over there for potential positional targets around 80 rupees.
Okay, that's the view. Positional target of 80 rupees on a Vascon. Hope that answers your query. The next query is coming in from Yash Sampath. He has a query on Wari Energies. The stock saw good traction, but kind of cooled off. Especially I think since the start of or mid-September, it has seen more cooling off. Vari Energies, what would you do with this stock now, Ruchit?
So existing positions, if there are, then one can continue to hold on, but no fresh buying indications are there over here. The 200 DMS support for the stock is coming around in the range of 2,900 to 3,000. So if we get any dip towards that 3,000 2,900 range, then the risk reward ratio would become favorable to create fresh longs there.
Okay, hold is the call for now on a Vari Energies. But there's a query coming in from RG on JB Chemicals. The stock has been extremely sideways, just going through the charts 5 days, 1 month. No big moves as such. But since the 29th of July, the stock saw quite a bit of a cool off. Any thoughts here?
Still, the trend remains sideways only. Above 1800, the momentum would pick in where the breakout would be there. But till the stock is trading below 1800, I think the short-term trend remains range bound, and hence 1600 to 1800, some consolidation could continue over here.
Okay, sideways, that's the trend. Hope that answers your query. We have a query on IRFC as well. The stock, in fact, has really not given out any particular trend, so to say, when I see the 1 month and 5 day charts. Today as well, it's extremely flat. But railways did see some buying, right? Just recently. IRFC in particular, how is this particular stock looking? Any kind of signals emerging from the charts now? Should one buy into it? And if one already has it, does it make sense to keep invested in this?
So the railways also had seen a decent correction over last 1 year. I think in the last July or August 2024, the most of the railway names made a high which has not been revisited, and post that we have seen a decent price wise as well as time wise correction. But many stocks are trading near the mid to long term support. So we believe that price wise downside seems to be limited in some of the railway names. So if any existing long positions are there in stocks within the sector, then one can continue to hold on and expect a pullback move going ahead. Definitely not a very short-term trade, but positionally one can expect that downside would be very limited in the railway names from here on. Within this entire space, we like RailTel, where the stock has found a good support around 330, 340 recently. So I think prices bottom has been done over there. So overall, as a for the sector, we think that the stocks would show a rebound going ahead. Obviously the markets are not in that phase. The broader markets are not in that phase where we are witnessing a broad-based rally in the markets. But whenever the markets turn favorable in the next leg up, then the railways should perform well. So if any existing long positions are there, continue to hold on. One can also look at RailTel to keep a watch where, in case of resumption of any positive momentum in the broader markets, then RailTel can be bought within this sector.
Okay, RailTel looking attractive from the railway pack, but if you have any positions in IRFC, stay put in that. Shankar, I hope that answers your query. Next query, we spoke about mid-cap IT, but there's a query on a large-cap IT name, TCS. Anand Roop Bandyopadhyay wants to know what's the next support level to watch out for. Of course, it is coming off its worst weekly fall in 5 years. The stock has, of course, been languishing around its 52-week lows as well. But in terms of support, where do you see a floor?
So IT as a sector, as we spoke, the low top, low bottom structure still continues since the stocks, especially the heavyweights, have not seen any kind of fresh buying interest over last few months. TCS has support around 2700 kind of levels where September 2022 lows were there. So 2700, 2680, that was the previous swing low. So support lies over there. So for the IT frontline stocks, I would recommend to keep a wait and watch approach rather than doing any kind of bottom fishing.
Okay, that's the view. Avoid any kind of bottom fishing on a TCS. But with that, we've come to the end of the query segment for today. Before I let you go, Ruchit, any recommendations for viewers this morning?
Yeah, so metals is one space where we believe that the stocks can do positionally well. No, within the metal space, National Aluminium has positive chart structures where yesterday we witnessed a price up move from its support, that too with very high volume. So one can look to buy Nalco over here, keeping a stop loss below 208 for potential trading targets around 221.
Okay, that's the view. Nalco, that's one recommendation coming in from Ruchit. With that, Ruchit, would like to thank you for taking out time and joining in. Wish you a very, very happy festive season. Look forward to interacting
Thank you.
with you again. Of course, we will be interacting before Diwali for sure, but wishing you a very, very happy Dussehra.
Thank you, Nandita.
Thanks a lot. Well, on that note, take a look at the market before we bring on board our next guest for today. We are holding on to gains. Somewhere around 0.2% kind of gain on the index, 45 points higher on the Nifty. We've reclaimed that 24,650 mark. But whether or not these gains will sustain, we'll only get to know. And of course, remember we have the RBI policy outcome at 10 a.m. So the markets will be swayed by the outcome and the governor's, tone as well. So lots to watch out for. Can't assume that we're going to, be cruising along in the green for the rest of the day. Sensex above 80,300. Mid-cap index, however, has gained some strength. Now it's up 0.5%. Bank Nifty as well, it had slipped into the red but managed to edge back into the green. Advanced decline ratio has gotten better, 3:1, that's the NSE advanced decline ratio. 1850 advances to 590 decline, so that's also looking fairly strong. In terms of some of the mid-cap movers, I want to point out some names. The likes of Sun TV that were out of favor yesterday have made a comeback. Tata Investment had hit a fresh 52-week high yesterday. Today as well, it's extending those gains. In fact, the stock has been gaining good traction, up another 5%. The stock, of course, is in focus because Tata Capital's IPO will be opening next week. Pfizer is another one that's gaining in some bit of news in terms of tariffs there, that will be exempt. So that's a good reaction coming in on the stock, 4% higher. Hoodco up almost 4%. The second quarter update is fairly upbeat. So Street, of course, cheering that. NMDC Steel is the next one. Shriram Finance on the back of clarification that no large shareholders looking to pair stake. So that's come as good news. Aether Energy, Lupin on the back of some news flow here as well. Page Industries, Asahi Glass. These are some of the gainers from the Nifty 500 universe. Let's then see what the top gainers on the index are at the current juncture. As I mentioned, Shriram Finance, Sun Pharma, that's also among the gainers. Bajaj Auto reported good sales figures for the month of September, stock reacting to that. Trent, of course, that's the worst performer of 2025, but today some bit of buying emerging here. But on that note, let's also bring on board our next guest for today. Joining me is Harish Krishnan, who's the Co-CIO Head Equity at Aditya Birla Sun Life AMC. Harish, lovely chatting with you this morning. Wish you a very, very happy festive season, first of all. Hopefully, some of the festivities will return to the Lal Street since we have a important queue to watch out for in just less than half an hour from now. RBI governor's speech, wherein he will be declaring his the outcome of the monetary policy. Very first question, what are you expecting? There is a camp that expects a 25 basis point rate cut, front loading after GST cuts, given the fact that companies would be looking to expand their capacity and that would come as a boost. But there's another section that believes that RBI should adopt a wait and watch approach. Which camp do you belong to and what are your expectations?
Good morning. Festive greetings to you and to your viewers. So it does appear that, following the series of measures to boost domestic consumption by the government, our sense is that the Reserve Bank of India will also further cut interest rates to further bring in a potential to boost domestic demand. So that seems to be the prevalent view at this point of time. But clearly, what matters more, I would imagine, is more the commentary that follows the policy decision, in the sense as to how data dependent and what are the key variables that they are going to watch out for further moves. The inflation prints are reasonably benign, and that gives reasonable support for our view of cutting interest rates. But I think the bigger issue is that of on the external front, given the depreciation of the Indian rupee in light of the tariffs that have got imposed. how much really is the room for further cuts, so that it doesn't bring into a great pressure on the external front. So that really is the thing that we are watching out for as far as the RBI policy meet is concerned.
When you talk about the dovish tone of RBI governor, if at all there is no rate cut, and of course, and if there is no stance change, which of course most of them have ruled out this time around, what is it? What is that one thing that you will watch out for in the commentary itself that would give us dovish signals? Would that be the revision of inflation forecast for the first quarter, which now of FY27, which now stands at 4.9%? That was one thing that was taken as hawkish in the last policy. If a revision of that happens towards 4%, would that be taken up as a dovish signal from the RBI governor?
Sure. I think inflation, from whatever we can see, is been undershooting, and therefore I would imagine that that's more the base case view in terms of a revision downward. So for us, I think the bigger question is more about how RBI is contextualizing the external front pressures to the domestic policy. If if there was no pressure on the external side, I would imagine that the chances of a rate cut is very high, given the kind of underwhelming growth that we are kind of witnessing. It's There still is room to get to our growth potential, as well as a subdued inflation trend. So both of them, purely from a domestic policy point of view, should point to a rate cut. So therefore, clearly for us, the thing that we're going to watch out for is what is their commentary as far as the external front is concerned, and are there any other bullets in their arsenal that they can kind of fire to kind of navigate that.
Got your point. In terms of tariff itself, of course, both sides are working round the clock to thrash out a deal by fall, that's November. But in case that doesn't happen, given the fact that we've seen Trump firing salvos in different sectors now, right? First IT, then pharma, then movies, furniture, whatnot. But given the latest developments, if at all a deal doesn't come by, say beyond 2025, how much of it is in the price? Because do you think markets are already factoring in the fact that 25%, the additional 25% will go? If a deal isn't struck by the end of this year, how much of a room for downside do you see in this market?
So I think the base expectation that we have is that the extra 25% will go, and more importantly, that we'll get in alignment with the rest of the Asian peers. So that really is the base case. Now, whether it is by end of 25 or under 3 months or 4 months, I think that seems to be the base case. Now, in case this prolongs for very long and we go into an extended phase of reasonably high tariffs, then I would imagine that there will be a reasonable amount of downside pressure, more from a sentiment point of view, not necessarily from an earnings point of view, but purely from a sentiment perspective. Also, do keep in mind that when we started looking, when we look at data, be it in mid caps or be it in small caps or even in large caps, the number of companies that have, say, a greater than 10% share of their revenues coming from exports channel, more than 10%, is actually quite large in India. So therefore, while in aggregate terms, yes, domestic demand is the key driver, and therefore aggregate earnings may not necessarily see any kind of a pressure. But when we look bottom up, I think that the export channel has actually been a very strong growth driver for many mid and small caps, especially over the course of the last 3-4 years, and that could come under pressure. So I would imagine that there is going to be a greater amount of readjustment and recalibration that we have to do as far as portfolio construction is concerned. In case we move to the view that it's not going to take under 3-4 months, but this impasse can continue for maybe under a year or so.
All right. Okay, that's the view. But let's talk about earnings as well. Starting the earnings season next week with TCS reporting on the 9th. First quarter lacked any kind of fireworks. Second quarter as well is expected to. I don't think there are any great expectations from second quarter. So, especially post GST cuts, which are the sectors that are poised to outperform this financial year? Because as I mentioned, second quarter, a lot of readjustments happening post GST cuts. So expectations are anyway low. But post that, future quarters, which are the sectors you think that are expected to do well?
Yes, I think we are going into the earnings quarter with very low expectations. On the external front, the challenges are pretty known. As far as the domestic consumption sectors are concerned, clearly the channel-related issues with respect to the GST cut will be a dominant feature on most earnings prints as far as Q2 is concerned. So therefore, given the fact that we're not going in with very high expectations, the focal point is going to be on the commentary as far as the festive season is concerned and the revival going forward. I think it's important to take a step back and see the tools that have actually gone in to boost domestic demand. So if you take a block of say 2018 to 2023, the overarching focus of the government seemed to be to focus on supply side initiatives, be it the tax cut for corporates or PLI initiatives or various supply chain measures or the focus on significant government capex. We've seen a marked departure in the last 12 odd months, wherein we've seen many state elections going in with a reasonable amount of quote unquote dole outs to voters. Secondly, we've seen the tax cut announced in the budget. We've seen now the GST cut announced, and then we're likely to get into a wave of elections going ahead as well. And in fact, some of the larger states in terms of population are going in for elections over the course of the next 12 odd months. And that again is something to be watched out for, followed by, say, the pay commission reforms. So when we look at it and aggregate, we've seen a very big boost that the government seems to be signaling as far as the domestic demand is concerned. So while in the near term we are not seeing any kind of green shoots, be it in terms of credit growth or in terms of various categories of consumption boost, I would imagine that with so much of money being thrown at boosting domestic demand, I would be favorably poised to these sectors to drive recovery in momentum as far as various consumption sectors are concerned. So the big call that we have is from the investment cycle that did very well from 2020 to 2024. We are now moving into the consumption oriented space where we think over the course of the next 2 3 years, given the slew of measures and along with that the rate cut by RBI and liquidity enhancement measures, we would think that domestic demand and consumer is likely to be in a far better place. And that is where, given the fact that they've kind of underperformed over the course of the last 3 4 years, we think that there is relative margin of safety. So that's the first pocket from a slightly medium term perspective that we are positive on. The second pocket is clearly that of the export channel. Yes, for now, there is, of course, the worries of tariffs and what Mr. Trump will do on a daily basis. But clearly, our role in global supply chains, as well as in many sectors, we have very dominant players also starting to emerge through. Um, I would imagine that this is providing us a very good opportunity. Of course, the near term looks extremely bleak for many of these companies, but valuations and markets are more a function of terminal value, and we think that there is a lot of value emerging as far as the export channel is concerned. The third theme is clearly that of financials. Over here, the overarching narrative is that there should be some pickup in credit growth, but pretty much it's a very well discovered space, so there isn't any major room for surprises out there. So this is broadly our picks at this point of time: consumption over investment. That's the big call, and then exports providing us an opportunity to increase exposure because valuations and are reasonable given the context of today's worries on tariffs.
Sure, sure. Harish, since you mentioned consumption, it's a fairly wide spectrum, and one end of the consumption basket, autos, have already seen a fair bit of run up from since ever since the announcement of GST cuts on the 15th of August. How much of that is already in the price, and is there more room for growth when it comes to auto names? I'm talking about the stock movement. Of course, first half has been a washout for autos when it comes to sales. September is, of course, now we are seeing all the auto figures. There has been some bit of bump up, and it's expected to do well as a result of the GST cuts. But in terms of stock price movement, do you think a lot of it is already in the price?
I think the big move has happened in the last 2 months, especially with respect to the GST cuts that has got announced, and the biggest beneficiary being that of the auto sector. But I think one needs to also keep in mind that there is also going to be the pay commission hikes that are going to come through, where again, there could be a very important channel for demand that can come through. The way we are kind of positioning ourselves in auto is actually to be slightly more overweight in terms of auto ancillaries, where again, both a function of GST cuts, and more importantly, over the course of the last 4 5 years, we've seen a steady increase in vehicle pricing, and that kind of impacting demand. The fact that GST cuts have actually brought down vehicle pricing. There were a lot of safety related measures and regulatory aspects, that had to be done for the auto OEMs, which has got kind of deferred because of the significant impact it had on retail pricing. So our second derivative thinking is that a lot of those measures in terms of safety and emission standards, etc., those will come through, and therefore we think that auto ancillaries, which have a very disproportionate edge and market share in many of these segments, have got a far better potential to kind of get that incremental content increase per vehicle to come through over the course of the next 3 years. So that's the other area that we are positive on. So that's the way we think about auto. OEs look interesting. Maybe, I would say 60 70% of the big delta shift is already priced in, but there still is some more room. But a lot more positive on auto ancillaries, because we think there is a lot more room for a lot of these increases on the regulation side to come through over the course of the next 12 18 months.
All right, got your point. Harish, with that, I would like to thank you for taking out time and joining in. A little short on time today since we have the RBI policy coverage starting in just a few minutes. But look forward to a longish conversation sometime soon, Harish. Thank you for taking out time and joining in, and wishing everybody at Aditya Birla Sun Life AMC a very happy festive season as well.
Thank you so much.
Thank you. Well, on that note, just about 10 to 11 minutes to go for the RBI governor's speech. That's when the suspense will end, whether it will be a pause or whether he will surprise with a 25 basis point rate cut. But the markets, in fact, have gained some bit of traction. 80 point up on the Nifty now, very close to the 24,700 mark. Are the markets sensing a rate cut? It looks like it for now. So yes, almost close to 24,700 mark. Mid cap index, also build strength, up 0.5%. Bank Nifty looking good now, 0.5% up there as well, for 54,900 on the charts almost. Breadth looking fairly positive, and in terms of sectors, I can see real estate pack has picked up pace. It's up over 1% now. Pharma a close second. Autos almost 1% higher on that index as well. PSU banks mild gains today, but this sector has been anyway doing well for the last couple of weeks, outperforming private peers as well. But with that, we're completely timed out on opening bell. But don't go anywhere just yet, because 10 o'clock is when we'll be back with the RBI governor's speech, and post that we have a battery of experts to decode the RBI's rate move as well as the commentary from the RBI governor. So don't forget to tune in for that. But for now, it's a goodbye from me and from the entire team. I'll see you in just a few minutes from now. Thank you for watching.